has the highest probability of being an up close of any day of the year, the day after Thanksgiving. That is the highest single update of the year. So I'm looking for a 500-point down move in November. I'm not sure the date, but I think it's going to be probably around the 22nd. The 22nd actually happens on a Friday, so it'll most happen either the 22nd or the 25th. My guess this is my prediction now. It might not happen, but if it starts down, remember to send some cards and letters to the old Italian boy. Anyway, I did this with Bill Griffith back in 1987. I made a prediction that the Dow would be down more than 300 points in October of 1987. The reason why I did that is the biggest single up move that we had in the stock market had been 190 points. And so I multiplied it times 1.618 because fear is a greater emotion than greed, and that took us down to the 300 level. And, of course, on the 19th of October, it opened down 250 points to go down 500 points on the day. Whether we're going to have that type of crash or not, I don't know. We're just going to have a big correction, folks. I mean, I think so. I mean, this is my opinion, of course. And I want to share something from our friend Arch Crawford. Arch is my neighbor here in Tucson, and he put on the top of his letter here the part about this solar blast that's coming here around November the 16th. It could start and goes all the way out to November the 25th. But he also brings out the fact that we are at the highest stock market cap versus margin since 1929. I don't remember what 1929 was because I wasn't around then, but I still have the data for it, and it was a very bad time in the market. So just be real careful in here. When Basil is nervous and I'm nervous, and we're nervous for different reasons. I'm short and he's long, so you have to be really careful. It's really scary in here because you're seeing some great stuff moving around that is really really exciting to watch. We'll see if it happens. But if it doesn't happen, that means everything's going to be good, and we'll be living in Camelot, for the rest of the time here, without any trouble. So that's for sure. We got the Dow Jones still up about 60 points. The S&P is up a few points, and we have the Russell is down a little bit, and the NASDAQ is down a little bit also, which is very unusual to see the NASDAQ, down a little bit with the Dow Jones up so much. That's very, I think that in itself is quite unusual. The VIX index is still flirting with new lows. I mean, it just keeps drifting lower, all the time. Nobody has any fear in the market at this time at all. So we'll really see what's happening. The patterns that we're looking at are very, very bearish in my opinion. We've gone through these many times. I want to show when we come back from the break here, we'll take a look at it. The Dow's still up about 50. The S&P is up about 5.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I'm going to feature the stock of Tesla Motors. The stock topped around September the 23rd near that FOMC meeting. But what's interesting about it is, you know, I'm a pattern recognition trader, much like what Basil and Steve Rhodes and Tom and David, all of us look at patterns. And this just shows you the patterns that are in the market. What's important about the chart is the fact that you don't need to know a whole lot about news or anything else if you'll just follow what the patterns are trying to tell you. If there's more buyers, prices are going to be going up, and if there's more sellers, prices will be going down. On this particular chart, if you'll take a chance and look at it and go into Tiger TV, you'll see that the period between July and August, it made a high, and then it made the same type of high between August and September, and also in all of August and September. It repeated that same cycle high in price and time. In other words, the days up were equal to the days up in each of the A, B, C, D legs, making a 3-drive to a top pattern that occurred up around the $200 a share level. And then after that time, it had A, B, C, D patterns to the downside. And we had one yesterday where we were culminating the C point right before the earnings came out. What was interesting about this particular pattern is this time you had 2 lower highs. So you had what is known as the 1-3-5 pattern, 1 being the high, 3 being the secondary high, and number 5 is the last high that we had yesterday, which is 61% of the high from 197 a share and 786 from the high at 187 a share. And it made the target already today down at 146. But because we've left this huge gap of $23, that's telling us that we're going to drop probably another $20 or so down to the 130 level in Tesla. Now, this is what I do. This is when I look at these technical charts. I'm really not looking at the news very much at all. Occasionally, when something like Twitter comes out, it's very educational, and it can be quite funny too. And so I do follow, those because they are part of the history of the market. And I did that with Facebook, and I did it with all of them, just to see how well the markets trade a day or two, after the IPO, because then they start following the normal fear and greed of the market, and you'll be able to see the expansions and contractions of the Fibonacci sequences, and that's really what you're trying to do, to put the odds in your favor. So this is what I'm doing on my end to try to see what we're looking at. I'm going to on tomorrow's show we're going to be covering a couple of things. One in particular will be corn, because we're right at the price objective that Mr. Z in the Tiger Den has talked about for over a year now, that corn was going down to the 425 level, and December corn did in fact go below 425 today. So my hat's off to him, and we'll be looking at corn tomorrow along with some other things. We're having a good rally in crude oil today, and this is the first rally we've had in I think 7 or 8 days, so it's going to be interesting to see how far it should be. Have a lot of resistance coming in at the 95.50 to 96 level in crude oil. So we'll look at that tomorrow during the commodity show. One thing I did want to mention to all of you that are out there in Tiger Land is if you're interested in learning stuff about the market, and we're in a real critical time, we really need to know a lot, because anytime you're near historical highs or lows, that's when you really have to know as much as you possibly can. I would highly recommend attending Basil's show, and with the Tiger dollars that Tiger TV is offering you, you can really save a lot of money and get some terrific education, because Basil is as good as it gets, folks. He really does a great job, and he keeps you long when you're supposed to be long, and he keeps you short when you're supposed to be short, and you can't ask for anything more than that. One other thing that I want to mention that I've been following quite a bit are the new Tiger charts with the Gartley patterns put in. And boy, if you want something to scan for Gartley patterns, this is something that's very, very important to take a look at those Tiger charts, because they really do a great job. And remember, when a Gartley pattern fails, it becomes a butterfly. So you have several opportunities with that trade. If the Gartley pattern does fail, all you have to do is reverse, because it has a very high probability, better than 70%, of making an extension down at the 1.27 of that X to A leg. And so with the program picking out these particular patterns, it gives you a lot of flexibility on which trades you want to take, and you get quite a few different hits every day, because it scans thousands of things, including ETFs, which are really great for the market also. Well, the Dow's up 60, S&P up 5, the Dow's up 90. Wow.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to be talking a little bit about the Dow Jones Industrial Average today because the cash Dow Jones Industrial Average, the INDU, that actually made a higher high than it did last week. The futures did not. I don't know if that means anything yet because it's still early, and we've still got several more days of the week and all the rest of the month too. But at least for today, that has not happened. The same thing is true with the NASDAQ, and what's amazing is the fact that the NASDAQ is down. Given that the fact that the Dow is trading up almost $100, and that is pretty substantial move in the Dow Jones. So we'll see. The thing that's important here to look at is the pattern. We have this three-drive pattern that is completed in the Dow Jones. And not only that, but since May, going back to May 25th when we had a Bradley market turn and the market sold off about 8%, the Dow was trading at 15,400 at that time, and now the Dow is at 15,700. It's up 87 right now. And that, that's not very much. That's less than 1.5% over a long period of time. However, if you go and take a look at our next chart that we'll post into Tiger TV, and we look at the NASDAQ futures on a daily basis, you'll see that this market has been going steadily higher since May. In May, it was trading at around 3,000, and now it's around 3,370, so it's well up more than 3.5%. 10%, whereas the Dow Jones was barely up 1.5%. So all of the movement of most of these things has been in the NASDAQ stocks, which we've seen in Tesla, and we've seen it in Priceline and Google, and just, one after another. It's not as bad as it was in 2000 when things were doubling and tripling overnight, but it still has that same flavor of a little bit of robustness in the market. And then with the fact that the VIX index is setting at an all-time low, you have to be really careful here, being long stocks. That would be my saying. That's it. I'm not saying that someone asked me a question that I'm saying that I'm calling a top. I am saying is the Bradley model is pointing down right here, and it points down into early 2014. That's what I'm saying. I don't know if it's going to be the top or not. I'm not saying that. I think that it is, but I guess I am saying it. Yep, that's what I'm saying. So we'll see if it's right or not. But the signal that I said on Monday's show was the S&P futures need to get below 1733. They're trading at 1765 right now. So you have a really good distance here of 30 S&P points, which is equivalent to about 300 Dow points. So you would have to get the Dow down about 300 points in order to trigger the sell signal that I'm looking at with the E-mini S&P. So I believe that the market's ready to turn here. The number of people that have used margin to buy stocks is at a record. We have record number of bullish consensus. We have the VIX at all-time lows, and we have all of these patterns that we're looking at, these butterflies, 3 drive to a top patterns, and 5-point reverse wave patterns all coming together, at the same time. These I cover in my newsletter. If you have a chance, you can get a free copy of it by contacting TFNN, and you can take a look at this last week's newsletter where I go over all of these patterns to show you, how they line up. So that's what we're looking at. They don't let the little people, win very often, and so far that's what's been happening. I don't think Twitter will have very much to do with it, but it will be a factor in the market tomorrow, just in case if it's too exuberant, or if it is in fact just a real bomb. And it could be a bomb because the company's never made any money. So I don't know if that's going to be a factor or not. Sometimes it is in these events, and other times it isn't. It wasn't until Facebook, came out. It came out at around $40 a share, went all the way down to 17, and we didn't get the first buy Gartley pattern on the Facebook. As a matter of fact, I think that's one of the things we should take a look at here, because this will be the same type of thing that you'd probably want to look at if you want to buy Twitter, is to wait. You might have to wait a couple months. If you waited almost a year to buy Facebook, you could have bought it at $23 a share. That was almost half of what it came out at, and now it went all the way up to 54. So wait for the first buy signal that you get. Don't go in on the opening day. I mean, that's just, look what happened if you'd have gone into the opening day, on Facebook. I mean, it opened on the high, closed on its low, and dropped more than 2/3 of its value. And of course, if you held it, you're really smart now, but a lot of these things don't come back like Facebook did. So you don't want to sit there for well over a year and a half, with a losing position, and finally, the big gap gives you a big chance of moving to the upside, which in fact you really did. Okay, there's a lot of one of the questions that someone has brought up is about whether we're in a bubble or not, and the answer to that is you don't know you're in a bubble when you're in the bubble. You know it afterwards. That's usually what the case is. All I do is I look at the slope of the line of how fast it's going up. If it's going up at an angle of close to 70 to 80 degrees, nearly perpendicular, you have a pretty good idea that it's in some type of a bubble. You'll see the same thing with Tesla and Netflix. They do not defy Isaac Newton's law for long. What goes up must come down. It's just a matter of when. That's the key factor of what we're doing when we're watching these things. I'm just saying, folks, be really careful in here, because there are a lot of things that are warning signs. I think Basil covered several of them I tried to cover some of them too, but when you're looking at record margin debt, you're looking at the VIX index, sitting near its low, and nobody has any fear in the market at all. And all the news coming out is usually bullish, with the exception of something like what happens to Tesla and a few other isolated stocks. But this is what's going on. And they're hyping it so much on CNBC and on Bloomberg, especially the Twitter thing, that this is the salvation to the human race. And it's just, I have never used Twitter. In fact, I wouldn't know how to start. But they're not making any money. I mean, how do you value a company at $30 billion that's not making any money? So if they price it at 25, that means it's going to be worth $20 billion. If they price it at 35, it's going to be at $30 billion, and they're only offering 13% of the stock. So it's going to be very, very interesting to see what happens, in this environment that we have right now. All I know is these aspects that we're looking at for November, these are big ones, folks. We had one we had one on the 9th of October, we had one on the 31st of October, we had one yesterday, and we have one on the 15th of November, and then we have another one on the big one is on the 23rd, 24th of November. That's the really, really big one. So we'll see what happens on that day. And all that is just a lot of planets coming together. It's nothing more than energy levels. That's really the only thing that you're looking at when you're watching these aspects occurring the way that they do. Now, I wanted to bring out a long-term chart here that I mentioned just a little while ago. I want to show you what it looks like on a weekly basis, because it is, really at the extreme of something, and we've had we're about halfway through this 2-year cycle, and you'll see that we are right near the bottom in the VIX index at around 13 level. It's got as low as 11 a few times, but we're right at 13. And I remember in 2008, that thing got to 90. So that shows you what extreme fear looks like, and what you're looking at now is complacency. One of the things that I happened to look at this morning is I saw a picture of Carl Icahn being interviewed, and I happened to know him. He had a fellow working for him when he was at TWA named Frank Polcrano, and I know Frank very well through his son. And Frank worked with our Icahn as his number one man for several years. When he reached the $5 million level, which was about I think it was more than 15 years ago, he retired at the age of 70 to Florida, to Marcus Island, Florida, where he can go fishing every day on his yacht, and he just clips coupons. And but I did meet Carl Icahn. I had dinner with him once with Frank, and it was very interesting. But when Carl Icahn comes out and says that we're entering the golden era of stock investing, that would just scare me to death, because I remember when Warren Buffett would come out with his statements, all you have to do is to go back and mark those spots on the chart, and they're probably doing just the opposite of what they're telling you to do. We've seen that happen too many times. So be careful with the stuff that you hear, including what you're hearing now on TFNN. Defy human nature, folks. Do the work yourself. Prove that this stuff works, and then go after it. Then you really have something that you can really, hold your hat on. So we've got the Dow approaching, it is. The Dow just up 100 points right now. The S&P still up 5. The NASDAQ is still down a little bit, but we're hanging in there okay. We've got gold is up about $6. Silver's up about 16 cents. Not too much happening across the commodity markets. That's the other problem that I see, is that many of these commodities are in terrible bear markets. We've already seen what happened to coffee. I posted that as the first chart into Tiger TV today. It's been going down for several years, as has copper. And copper usually has a 85% correlation to the stock market, and that correlation stopped in January of 2012. And it's been going down for almost 2 years straight down. Well, not straight down, but in a very orderly bear market of lower tops and lower bottoms. And copper today, even with gold up, copper is still down another $2.50 with the Dow up 102 points. So that's that's if copper is used in so much stuff, whether it's the iPhone. I don't think it's used in Twitter, but but Twitter's used computers, and that's part of that. So I don't know why copper is not going higher. It should be pretty good. Now someone's asked for a special chart, and that is the XLF, which is the financials, and I've posted charts for Goldman Sachs and some of the others. Now, if you'll give me a second here, it'll only take me just a second to get this XLF. I don't look at these indexes very often, but I can look at them, and we'll just see what we can take a look at. Yeah, we've got it right here, and it's made some type of a double top. More than that, a triple top. Hold on one second. Let me get this thing refreshed. Yeah, there we go. We're okay. Well, we've made a triple top here in the XLF. That's in itself, it's diverging behind the market by quite a bit. We topped in July. We had a lower top in September, and now we've had a lower top just last week. And if we go back and look at this on a long-term weekly basis, and all I have to do is to refresh it a little bit, you'll see where we are. Hold on. I'm not able to do it. Unfortunately, the database for eSignal is not kicking in right now, so you'll have to I'll have to hold that for another time, putting that chart of the XLF in. But the XLF topped in 07 at 38, and it's only trading at around 20 now, and we got as low as 5. So it made about a 50% retracement back. In fact, it's a Gartley sell signal at that point back in July, and that's what we're looking at. The charts of Goldman Sachs look rather bearish, even though Goldman Sachs is up today. The charts of Bank of America and J.P. Morgan all look very bearish in the banking sector. I covered those in the newsletter, and those are already started to turn down. But the overall market has not turned down as yet. It's still held up very well. And like I said, it's quite amazing when you get the Dow up 100 points and the Nasdaq is down on the day. I know they're different stocks. I say that all the time, but to have all of the Dow stocks, almost 30 of them going up, and the Nasdaq having trouble is a little bewildering, because usually when the market's up that much, there's sympathetic buying, all across the level of time. Now, someone asked a question about the margin debt, and that basically what that means is that people are borrowing money to buy stock, and the reason why is that the cost of money is so cheap. Why not? Because if you can buy stocks that have a dividend of 3 or 4% or 5%, and you can borrow money at less than that, then you've got a good deal going for you, much like we did. Someone asked a question about December corn, but we're going to cover December corn tomorrow because it's below the level that we were looking at, 425. We're going to be looking at March corn on the commodity show tomorrow, because you're getting ready to roll over from December to March very soon. We've only got about another month to trade December corn, so March is going to be the lead month. We've got the Dow up 100, S&P up 5, Nasdaq down a little bit, and gold up 7.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. And the last chart that I posted into Tiger TV is the long-term weekly chart on Treasury bonds. This is the 30-year T-bond. And as you can see, it completed a very, very large ABCD pattern into 2012. This pattern is very similar to what we're seeing now in the NASDAQ, the Dow Jones, the Russell, the S&P 500, most of the stocks that are traded on the New York Stock Exchange. So that's the same large pattern that we're seeing at this point. In addition to that pattern, we've completed a head and shoulders pattern during 2012 and 2013, and now we have tested the 61% retracement down here at 129 in the Treasury bonds. We're trading around 132 right now. The problem is the bonds have not rallied very much. They just can't get out of their own way. That's telling us that interest rates, want to go higher. And so my advice is if you have to refinance a house or you're interested in purchasing a house or something, you're probably not going to get much lower interest rates than what you have, going in right now. So we have a negative environment for bonds, and remember the bond market is about 6 times the size of the stock market. So even though you're watching TFNN and Bloomberg and reading all about it, the real money out there is placed through the bond markets, whether it's muni bonds or short-term 10-year bonds or 20-year, 30-year bonds. That's where the real money happens to lie. The last question that someone asked me was about the U.S. dollar. Last week we focused on the euro at the 138 level. It hit that level, had a huge break. It's had a really strong rally here the last day and a half of about 140 pips. This is the first ABCD correction that we've had over the last 8 days in the euro, so this is normal to see it happen. As long as the euro does not exceed 137, it still should be in a down move. Tomorrow, the ECB, European Economic Group, their banking system, will be meeting to discuss interest rates for the European Common Union, and so that will affect the currency markets, quite a bit. That will happen while we're asleep, of course, but we'll be looking at that when we wake in. We've got the dollar is basically down just a little bit today with the euro up and the pound up. We've got the Dow Jones up 104, the S&P's up 6, and we got the NASDAQ is still down a little on the day, so things are holding together relatively well in the stock market. I wouldn't expect too much fireworks until we near the end of the day, which is another 3 hours of trading. We're about halfway through, a little more than halfway through right now, so it's held up relatively well at this time. Someone asked a question about Apple, if I'm still looking at a price objective of $5.55, and I think we could do that. Even if the market goes down, Apple could still go up because Apple came down when the market went up. So it dances to the tune of its own drums, and which they all do. And you have to keep in mind that that's very, very important fact in the markets. So remember, margin debt is high. We've got the VIX index at all-time lows. We've got stocks at all-time highs. We got patterns that are completing that we haven't seen complete like this in many, many years, so you need to be careful up in here. And I certainly hope that I'm wrong and everything goes up forever. But whether that happens or not, remains to be seen. But in fact, we have some very critical dates coming up here in November, mainly November the 15th. And again on November the 23rd. Okay, folks, thank you very much. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.